Let me pivot now to what I call the new Great Depression or the Global Depression. Here, there's a lot of confusion over definitions. People are familiar with the definition of a recession, the R word, recession. It's generally defined as two or more consecutive quarters of declining GDP. A couple other bells and whistles, but that's basically the definition. Australia got through their first recession in, I think, 26 years, maybe 27 years. But I think the longest on record for a developed economy. The U.S. Got through a severe recession in 2008, 2009, and had another, well, the most severe since the end of World War II in 2020. But that's over. There is growth. Growth rates vary, but there is growth around the world. At least, well, sorry, at least in the United States, North America, generally Australia and China. Um, uh, Europe is in a back-to-back recession. They had a recession in early 2020, a recovery in late 2020, and a new recession now. So Australia is back in recession. So that's the definition of a recession. So people have an intuition that, well, depression sounds worse than recession. So if a recession is 2 quarters of declining GDP, two or more, a depression must be 10 quarters of declining GDP. It must be some really horrible thing. And depressions are bad, but that's not the definition of a depression. You can have growth in a depression. It's just that the growth is below trend. It's below potential. And so it's depressed growth. This is true in the United States during the first Great Depression from 1929 to 1940. 1929 to 1933 was a flat out depression, down the whole 4 years. But the Great Depression is conventionally dated from 1929 to 1940. But in the middle of that, 1933 to 1936, the US had pretty good growth. The problem was it had fallen so much prior to 1932. It was growing, but it was in a very deep hole. It never got back to the pre-1929 levels. The stock markets never got back to those levels until 1954. Commercial real estate never recovered the pre-1929 level until 1954. It took 25 years to dig out of the hole. So even though you have growth in a depression, it's depressed growth relative to trend. You still haven't recovered your losses. Today. The US has not regained the 2019 levels of output. Yeah, we had growth in 2020, pretty good growth in the third quarter, growth in the first quarter of 2021, but we're still not back to where we were in 2019. So that's a depression. That's going to continue for a long time. We will have growth. We do have growth, but it'll be quite low relative to long-term trends and will not get us back to where we were for a considerable period of time. So that's what we mean by a depression. And you have to look at not just lost output and growth. You have to look at lost wealth. People say, oh, look, we're having a reopening. Restaurants are reopening. Well, yes, a lot of restaurants are reopening if you survive, but a lot of restaurants didn't. They're closed permanently. They broke the leases. They fired the employees. The equipment's up for sale, 10 cents on the dollar. In other words, you may get output, you may get GDP back with these gradual reopenings, but where's the compensation for the lost wealth? And that is another problem. And again, it's a major setback, and it's why we're in a depression. There is no pent-up demand. That's nonsense. You hear a lot about it. Oh, the economy will come roaring back because of pent-up demand. No, the example I give, and there are many examples, but during the 2020 quarantine, we were locked down for about 14 weeks. My wife and I like to go out to dinner on a Friday night. Well, for 14 weeks, we didn't go out to dinner. First of all, because the restaurants were closed, and secondly, because everyone was pretty much locked down in their homes. Well, by last summer, restaurants reopened. We went out to dinner, but we didn't order 14 dinners. We ordered one, the way we usually do. In other words, okay, we were back out. The restaurant was getting some revenue, and we were having dinner, but those 14 dinners we skipped were permanently lost. There's no pent-up demand for those lost dinners, or think of anything else. Shopping, groceries, dinners, movies, shows, vacations. It's just lost. So there is no pent-up demand. There is no V-shaped recovery. The notion of the V was that it would go down sharply and come back sharply. Didn't happen. What happened was it went down sharply and it came back, but then it truncated. Right now we're leveling out. So we have sort of a half a B on the upside, but not a full B. We're not back to where we were. And that strong growth, relatively strong growth coming out of the bottom of the recession from 2020, which persisted pretty much through the third quarter, and then it petered out again. That is now flattening. So are we in a second technical recession? No, but we're not growing anywhere near what we need to regain the lost growth in many measures. And so we're back to kind of that weak growth, which we had from 2009 to 2019. We had 10 years of depressed growth following the global financial crisis, and we're kind of getting back to that again. So don't buy into the story of, we're in a super boom or super growth period. We're growing, yes, but it's quite weak. And so I would also emphasize, again, I talked a little bit about the mental health aspects. We don't have to call it mental health, just call it behavioral adaptation. It takes a lot to get people to change. And the pandemic is a big deal. Worst pandemic in 100 years. Third worst pandemic in 650 years, going back to the Black Death and then the Spanish flu and now the COVID-19. So people changed their behavior. They stayed home. They became fearful. They put on masks. They closed businesses, et cetera. Well, now everyone's saying, well, the virus is under control. Vaccines are spreading. Herd immunity is building up. You can't get it outside. After all, the 6-foot social distancing was a joke. After all, now they tell us, but by the way, the 6-foot distancing came from a 19th century German scientist who was working on a different pandemic and said it was a guess. There was no real science behind it. And he was candid about saying it was a guess. Somehow that became the law of the land, but there's nothing to it. These things didn't work. They didn't help, but they did destroy social interaction and destroy the economy. Well, now a lot of that is going away, but the behavior is the same. And this is my point. It's not like throwing a light switch where, oh, we'll just be the way we were in the summer of 2019. No, these effects will be intergenerational. These effects will linger. They will not go away easily. There's always a place for anecdotal evidence. I was out shopping the other day. I was minding my own business, looking at light bulbs, and overheard a conversation with one of the customers and the clerk at the counter. And he was saying, I hear the bars are reopening, but I'm not going. If that's all you have, if that's your entertainment, fine, but I'm not going. I probably won't be in a bar for another year, and I'm wearing my mask. I don't care what anybody says. Well, those are choices. I didn't say a word, and I'm not going to, and I'm not here to tell other people what to do. Let everyone make their own decisions. But I found it fascinating as an anecdote that there was no science, no necessity behind what the guy was saying. But he was demonstrating the fact that he can't go back to the way he was. He can't suddenly spend money at the bar or a restaurant or movie theater or any place else for that matter. And that he expected he wouldn't change his behavior for a year. Well, you know what? He might not change his behavior for 5 years or 10 years. These effects are intergenerational.